Good evening, good evening. Good to see everybody. Good morning, Sandy. On the other side of the world. Good to see you. Hi, Perry. We're going to give it a standard minute or two to let the stragglers pop in, make sure everybody's audio is connected. Yada, yada. And hello to you, Leonard Jones. Good to see you, sir. Glad to have you. Like your enthusiasm. Love it. Well, the market did not like the inflationary data today, coming in a little. Here's the thing, last time was 3.4, expecting 2.9. We got 3.1, better than before, not as good as expected. Man, the small caps got punched in their mouth a little bit from that whole thing. I think increasingly you're seeing people think it's not even going to be May, but it's going to be the next report. I think it's early May, then late June, I believe, if I'm thinking correctly. Anyways, all right. All right. We've got a good group. Let's get into it. Welcome everybody to the Market Watch Group Trading Foundations. We're getting close to the end of this thing already. We're down to the last few weeks, wrapping it up with a few dotting of I's, crossing of T's, tying up loose ends. Today, we're talking about routines. We know routines is extremely important to us. It has its own section in our trading plan. One of 8. If it's one of 8, you know, what we need to do. So, okay, trading routines. Let's get into it. As always, my name is Scott, and I will be your host. These are the disclaimers. This is educational, illustrative only, not intended to be recommendations. We are not advisors. Yada, yada, yada. Okay. Agenda. Oh, Robert said, I've been shoveling heavy snow today. A blower might not have helped. Too heavy, too wet. New Hampshire. That's right. I was speaking to somebody who was in Boston. Boston. So they were getting snowed on today. Interesting. Let's hit the agenda. What are we doing today? Why routines, and as a subset of routines, habits. Rhode Island matter. We'll talk about the role habits play in our trading. We'll talk about the benefits having effective routines will give us. We'll break down into the broad categories of routines, starting with daily routines. What, when, how, why, in what order. We'll do the same for weekly routines. We'll do the same for monthly. Could you even have quarterly and or annual? I mean, annual is when you're hitting like tax preparation, things like that. Quarterly. Eventually, right now, we're looking at our trading plans every week. Eventually, you're going to start slowing that down. You're going to get to where you're saying, hey, you know what? My trading, my rules are in a certain place. And I feel comfortable with them at this point. Small adjustments only. Great. We want to make sure we get those routines clearly defined. We also want to talk about our routines in regard to analysis and execution. How we execute trades, that should be habitual. How you analyze a trade when you're done to learn from it. That should be habitual. So it's not just your habits of like, here's what I do in the morning. Here's what I do on Sundays. Here's what I do the first Sunday of the month. Yeah, those are important to schedule your cadences of what various activities you're going to focus on in these different time intervals. But even the habit of something like, what's your habit, your routine for technical analysis? When you look at a chart, I do the same routine every time, over and over and over and over and over. The way we analyze the market on Sundays, that's a habit, that's a routine. So be thinking about that. Analysis, execution, post-trade analysis. So what's your habit when you're done with the trade? Don't just slap it in the log and walk away. Slap it in the log, and then analyze a little and be like, okay, well, rate yourself. How was your setup? How was your trigger? Were you patient? Did you wait? Did you anticipate? Do you like how you set your stop and your targets? Did you manage the trade well? Right? Hold yourself to account after the trade is over and say, how did I do? Okay. Questions as they come. Give me some dialogue. Let me know that you are getting a good sense of this and if it's resonating with you. If questions come, put them out there as soon as you think of it. I'll address it as soon as I can. All right, let's go. Why routines, and as I said before, a subset of routines, habits, matter. Number one, consistency and discipline. Routines help us to build consistency in our trading behavior. It helps us stick to our strategies, avoid impulse. Anytime you think impulse, you're thinking about the chimp. Do you want the chimp making decisions? I mean, listen to the question. Hey, you've got a trading decision to make. Do you want the professor to make that decision, or do you want the chimp? They're like, chimp, please. Yes. Let's see how he does. Impulse. Habits reinforce discipline. We're taking the time to standardize every aspect of our process, every aspect, every day, every routine, every rule, every analysis, every philosophy, everything is standardized. And we do that so that we can improve it. Once we can't improve random, we can improve standardized. It's standardized, now you can make it better. Great. That's the objective. What that does is it helps reduce the impact of emotions on trading. Habits make us more efficient, have a greater focus. I always used to laugh. I would ask traders when I would be working with them, oh, how much time do you spend? Oh, Scott, I spend 5 hours a day. I'm like, woo, 5 hours. Are you day trading? They say no. No. Well, if you're not day trading, what are you doing for 5 hours? And they start, listing things off. By the time I'm done, I'm like, oh, you've got like 45 minutes and then nothing else. Without that definition of what we're doing and why, we really could just wander aimlessly through the market. And I see it a lot, right? They just sort of do things because they're doing something. Make sure you're doing the right things. That's our objective. Focused on the right things. Well-structured routines increase efficiency by streamlining activities. You want to get done, you want to do this. A lot of people are working full-time. So you're working full-time and you still have to walk the dog and see your kids, grandkids, go to church, volunteer, go to your whatever, right? We're busy. There's no need for us to just, if you enjoy it, great, and you have time, great, but I want to be efficient. This is a business. I enjoy my business, but it's a business. We want to be able to allocate time and mental resources to critical trading decisions and analysis, get as much done as possible in as little time as possible. Long-term success, developing good routines and habits is a key driver of long-term success in trading. Creates a foundation for continuous improvement, helping you adapt to changing market conditions, refine your strategies, right? That's what's, I think, so critical is it's hard to adapt random. It's hard to improve random. It's hard to adapt in random. You're randomly doing it anyways. Just keep throwing spaghetti at the wall, I guess. See if something sticks. You want to be very deliberate. Random leads to impulse. That's the chimp. Deliberate is focused. That's the professor. Okay. The role of habits. Automated actions. Conscious competence. We're doing this on purpose. We know what we're doing. We know why we're doing it. So it's faster. It's easier. We have automated responses to specific situations. It's actually a very interesting study. They call them heuristics with an H, heuristics, which is the way the brain creates these rules of thumb, so to speak, operational rules, because the brain is processing millions of bits of sights, smells, sounds, memories, touches, feelings, all being processed simultaneously. It's a lot, right? Brain's pretty good, but it's got to speed it up so it creates these snap rules of thumb. They call them heuristics, and very helpful. There's a guy named Daniel Kahneman, and he is half of a team, Daniel Kahneman and Amos Tversky, who won a Nobel Prize for economics, but it was behavioral finance, which is basically trading psychology. So they pioneered a lot of the research that I use when I discuss trading psychology, just fascinating stuff. But this Daniel Kahneman wrote a book called Thinking Fast and Slow. And it's that thinking fast, right? Sometimes we feel like another writer that you might know is Malcolm Gladwell, and he wrote a book called Blink, and he talks about thin slicing versus thick slicing. And we have sometimes this thought that if I gather more information, I'll make a better decision, but that's not actually true most of the time. What we want to gather is just enough information, not more, just enough to make that decision. And that's what we're trying to do with the role of habits and the role of routines and automation in our trading. Consistency and discipline, it reinforces discipline, making it easier to stick to the plan, avoid impulse actions. And of course, our good friend Kaizen and the life principle of continuous improvement. You can't improve what you can't measure. You can't measure if it's not consistent, if it's not repeatable, if it's not habituated, habitual. When we have it that way, we have the ability to make small, consistent improvements that accumulate over time, leading to that significant long-term growth and development. As I said, you'll see Kaizen at work over a 6-month period, because you will see 3 iterations in 6 months on your trading plan. We go 8 weeks, and then again, and that will happen within a 6-month period. And if you do 3 passes at your trading plan, define, refine, polish. The first pass, you're defining some things, getting pen to paper. The second pass, you're refining it. The third pass, you're polishing it. And you're really full implementation, record keeping, everything's going. You'll see what the habituation does and how much of a role it plays. Okay. Benefits of effective routines. We can optimize trade execution. And I'm going to show you this with alerts. I want us to automate some of those where we say, hey, look, this is a valid signal if it crosses this line. Great. Build the trade that way. Build a trade where you have a buy stop if you're a stock trader, or a triggering order at or above if you're an option trader, where you say, I'm going to buy this option, but only if the stock gets above this price. And then if it happens, you don't have to be watching it happen. It's automated. And when that automatic order executes, boom, guess what? Now we just triggered our stop and maybe our initial target. I can plug all that in. I can have an order on the top side that says, you know what, I bought 5 contracts. I'm going to sell 2 of them if it gets to this price. And I'm going to stop out of all 5 of them if it gets to this price. And I can have that order automatically generated the second the first one fills. Automation is all about routines and habituating the process. So we can definitely optimize execution. Make sure our orders are placed accurately on time, reducing costly errors, human errors. Improved risk management. Effective routines facilitate risk assessment and management, leads to better control of potential losses. Overall risk, we better manage our risk because we don't take a day off. And right, you take a day off, the market knows you're taking a day off. It's going to punish you for it. Don't take a day off. Watch it. Make sure that there's not a time where you don't stick to the routine of managing anywhere you have skin in the game in the market. Timely decision making. Routines will streamline your activities, allowing you to make quicker, better informed decisions. What are my routines? When I see a potential alert setting up at night, I'm gonna start building the trade, my stop, my target. I can make a quick adjustment if I need to, but I'd rather have something to start with. Then when it gets close to the trade, I can go see if those numbers still make sense. I've already got the trade that I'm thinking of set up. I just have to dial a couple of things in. Routines. Yeah, just get started. Get started so that when the time comes, you're ready to pull the trigger when you're ready to pull the trigger. Lastly, consistent strategy implementation. Routines reinforce the consistent execution of trading strategies. Right? When we do a post-mortem, which is a post-trade assessment and analysis, we want to make sure that we are seeing clearly that we are minimizing the impact of emotional trading and impulse decisions. It's got to be clear. It's got to be evident. We've got to be able to point to it and be like, yeah, see, I didn't do that. It's a numbers game. It's always in the data, right? It's always in the data. Okay. Questions? Let's pause before we get to the specificity of our timeframes and routines. Let me know if you have any questions about if you've been trying to develop routines, if you struggled, if you got them down. Evaluate yourself. Take a week and say, this week I'm going to evaluate my daily routines. Well, you better start with what are they? They better be listed. What, when, how long? We're talking about that right now. And then every day, you at the end of the day, give yourself a score. 1 to 5, 1 to 10. How well did you execute? I did great today. It was a 10. Oh, I missed a couple of things on my morning routine. That's a 7. Right? And at the end of it, you see what your score is. And you say, okay. You make some notes to yourself. This is where I slacked off. Great. Then you give yourself some action steps for going forward. Just like any process. What are we doing with the daily routine? Morning prep. As part of your daily routine, start your trading day with essential activities such as conducting pre-market assessments, research, analyzing the latest news. That's what we do, right? That's what we do. We look at the futures. We look at the news. We look at the economic calendar. If we have trades on, I'm going to look at the bid ask opens pre-market for those. I'm going to look to see if I have any orders that might be impacted. Things like that. Sandy says, still working on it, getting used to being up all night when the market's open. I imagine so. Yahoo's second only to my first cup of coffee. I love it. Morning prep. Trade execution. So I'm not going to trade in that first 20 minutes, pretty much ever. In fact, if I have an order that's going to trigger, I'm going to cancel that order. Some people might be like, oh, you're not supposed to cancel your stops if it's going to execute. No, I exactly am supposed to. I'm not going to let my order stop out on the open. God, you're just basically pleading with the market maker, please punch me in my face as hard as you can. You're like, what? Why? Yeah, cancel that order. Give it 20 minutes. If it's recovered, leave it. Place a stop below the low of the day. If it's at or worse, you're still going to get a better execution manually 20 minutes after the market has opened, because the prices will settle down substantially, especially for options. For stocks, not as important. For options, it's critical. Got to do it. Got to do it. When I might trade mid-morning, I might trade in the last hour. So I have 2 intraday, potential trading windows that I look at. You might only have one. Some people have none. They just have to place their orders at night. See what happens. Okay. Whatever it is, make sure you have a routine for it. Focus on tasks like placing orders, managing risks, adhering to your strategy. Post-market review. Later at night, when the market's closed, the chimp is in bed, go do some post-market routines, which involve analyzing your current trades, analyze any closing trades, analyze your watch list to see if there's anything that you think is ready for the next day. Make sure your log is up to date. If you're doing any assessments, or if you're assessing your daily routines, if you're assessing, give yourself your assessments. The market's closed, everything has settled down, right? Okay, great time to do it. Lastly, emotional management. As you go through your daily routines, remember to practice emotional management techniques to stay in control, reduce stress during trading. I know that sounds crazy, but I'll tell you right now, I'm a breathe guy. There's actually a book called The Oxygen Advantage that talks about how humans have basically forgotten how to breathe the right way. And anyway, a lot of benefits from breathing correctly. 4 in, 4 out. Control your heart rate. Control your heart rate. Control your emotions. That's what I believe. That's what I taught my kids playing sports. If you're nervous, 4 in, 4 out. At least a minute. Catch that heart rate. Okay. But whatever it is, find a way, right? Find a way. Visualize. I love visualizing. I sit down, I'm like, all right, this is you trading your best today. You're going to smash it. Self-talk, I'm all for it. Whatever it is, make sure you have it. Address that psychology. Okay, that's your daily routines. I have mine broken down into BMO before market open, DMH during market hours. I have 2 of those. AMC after market close. Anytime after 4, I usually do the evening time, nighttime. Weekly routines. Well, we do a good amount of those together. What do we do on the weekly routines together on Sundays? Again, the chimp is asleep. We're all alone. It's awesome. What's going on? We are analyzing the market. Every subtle adjustment or nuance that we can pick up on to help us better assess overall market conditions. We're looking at the economic calendar. We're doing some watch list maintenance, searching and watch list maintenance, getting rid of old ones, adding new ones. Those are all weekend routines, right? Those are all things that will help us to improve the week's execution. Do some analytics. Make sure your log is up to date. Get your short list ready to go. Make sure that you have some trade ideas for the candidates most likely to fire off. All of that can be done on the weekend. We're ready to go. The more we're doing this preparation, this proactive, people I think they underestimate how much impact it has to do it the right way. Because when you start doing it that way and you're like, oh, man, how did I ever do it not this way? Let's get to that point. We'll do it together. Review and analysis. So what can you do? Review the past performance, analyze what went well, what needs improvement. Always good to start the week with a couple of core ideas of what you want to do better that week. It's not like oh, I want to trade better. Do you? That sounds great. How? What specifically? This is what gives us the ability to very specifically define what are we trying to do better. Strategy refinement. We want to refine our strategy, make adjustments, set goals for the upcoming week. Any research and education, market trends, assets, strategies, searching, maybe some studying on the weekend. Portfolio assessment, assess your overall performance. Be thinking about risk management and trade management going into the next week. Make sure that it aligns with risk tolerance and with your current thoughts and perspective on the market itself. Monthly routines. Now what? Now we really got to get into the back office where we're further and further away from the minutia of the day-to-day trading. This is where we need to get to the top of a hill and get a general's perspective of what's going on. So we need to do performance evaluation. Run the numbers. What are your current numbers? What do they look like relative to your previous numbers? How are things going now? And really, really understand key strengths and weaknesses, areas that might have some potential for you to improve. Goal setting and planning. How? What do you want to do better? How are you going to do it? Make adjustments to your goals. Remember, goals are process oriented, not outcome oriented. It's not like, well, now I want to set a goal for 80%. No, keep trying to be a better trader. The numbers will take care of themselves. Portfolio review, comprehensive review of what you have right now. Do you have trades on? Do you have any longer term trades on? Are they all short term? How did this month look relative to expectations? And then obviously your continuous learning, allocating time for learning strategies, learning new and better technical analysis, staying up to date on the news, etc. Routines, I'll tell you this. Routines should be one of the easier to define. Sometimes trading rules can be hard. You're like, oh, I kind of have a sense for it, but putting it to paper can be difficult, right? You got to really work on that. This routine stuff, it should be much easier, right? First thing in the morning, what do you look at? Bob said Yahoo Finance. I agree. It's a great one. Yahoo Finance, what do I see? First thing I see is the futures. What's going on? Bam, information. Then I can look at the top 3 in the big news articles to see what's everybody looking at? What's informing traders? What are they reacting to? What happened? Then I can look at the economic calendar to see what am I expecting to happen? Is there any news coming out later? What was I expecting to come out that maybe I didn't see news on and I need to look into a little bit more? Yeah, just starting with the basics. Then what? Then I'm going to go look at the markets and I'm going to look at the VIX. I'm going to look at any trades that I have on to see if I have any adjustments that need to be made. I'm going to go through this routine and do it exactly the same way. And when I get to the mid-morning, I don't have to start over. I'm at the mid-morning. All I care about is there something worth trading? So in the mid-morning, now what? Now I'm going to look at the trades I'm in first and foremost. Always trades I'm in first. Always start where you have skin in the game. Then what? Then go to the potentials. That's the short list. If you go to the short list, there's nothing there. I mean, I guess you could do your full list, but you have a short list for a reason. Your full list really doesn't have, you've already done that, right? Sandy said, Options Industry Council have great podcasts and videos for beginners. Options Industry Council, OIC, as well as the CBOE has good free education available. So yeah, good call out. Thank you for that. Okay, so that's the focus. I would say in the beginning, focus, short, expand out. Start with your daily routines. Those are your most important. Okay, so you start with your before market open. What do you need to know? What time does it start and how long is the window? So, is it half hour before the market and you're done 5 to 10 minutes before the market, then you just watch it open? Right? What is it? Well, you don't need more than 10 to 20 minutes. Then, once you have the window, and the length, we want to be as consistent as possible. Then the next thing you're going to do is you're going to write the list of activities. What are you going to do specifically? That doesn't have to be like, and I'm going to look at it this way, but just like, what exactly are you doing when you go through it, and then prioritize that list. And now you have a routine. So then we do the mid-morning if you want, if you have one. When is it? How long does it last? What do you do first? What do you do second? What do you do third? There may not be a third. Maybe it's first and second. First thing I do, evaluate all the trades I'm in. For what? Obviously, I'm looking to see if anything is triggering like hey, this thing's going the wrong way. Be ready to get out. Or, hey, this thing's about to hit your target. Get ready to get out. Okay. Starting with when. When is the routine going to happen? Moving to how long? How long will it take? Moving to what? What will you do? Finishing with in what order? Prioritize it. You have that for every routine. Nothing gets left behind. Nothing slips through the cracks. Analysis and execution. So for us to better analyze the market and to better execute in the market, we want to start by understanding what is the market. Remember, I'm gonna remember to say it more frequently now. One of my favorite quotes in the market is, "The blade of grass who doesn't bow before the lawnmower gets his head cut off." Yeah, duck, my friends. Bob said duck, duck. But the only way I know to duck is if I know what am I ducking. If we're going to be water, we need to know what are we fitting. So we begin with the macro level assessment of the broad market, including economic indicators, global events, market sentiment. This sets the context. The Market Watch Group. Market Watch. I'm going to think of a theme song, and I'm going to come in humming it one day. It's going to be amazing. It's going to be like a blend of Mission Impossible and Top Gun with a little bit of Indiana Jones, something along those lines. All right. An influence on our trading nuances. Bob said, I felt the mower coming today. Took profit on 3 trades, 1 small loss. Love it. We talked about the hedge yesterday. We said, look, this is the signal. This is the signal, period. And it was. Is it going to keep being? I'm still bullish, man. I don't trust this. I think it's a dip. I'm a 7. I think it's a dip. We'll see. We'll see what happens. I mean, just a little bit more, the market just a little more adapting. The Russell started to get ahead of itself again. Oh, here we go. A little exuberant, maybe irrational exuberance. Who knows? We want to recognize that understanding overall market conditions inform subtleties and nuances of execution. Trailing stops, how close, when we start, when do we take profit, how much do we take? All those little trade management adjustments that just can seem insignificant and inconsequential when really are just so critical. The devil is in the details, without a doubt. So any information we can get from the market to help inform those details and the way that we should execute around those subtleties and those nuances, hell yes, give me that information. Lastly, adaptation in real time. I think I have this written poorly. I don't want continuous market monitoring throughout the day. I want to have the established routine. I don't sit and watch it throughout the day. I watch it in the morning, and then I come back in a couple of hours, and then I come back in a few hours, and then I look at it at night, and all that put together is maybe hour and a half. But I am monitoring it throughout the day, but it's not like that makes it sound like I'm staring at it. I'm not staring at it. But we do want to you can also monitor on your smartphone. That's true. That's true. Future is pretty flat now. Bob said already, maybe a pause. We'll see. That's what I would look for, to be fair. The ability to adapt in this evolving market landscape is a critical element of successful trading. Be water, my friends. Post-trade analysis, so important. If you're not doing this, you are leaving chips on the table constantly. There is so much to learn after every trade, where you really start to see the patterns of your own execution and your own biases. And you say, oh man, I keep doing this. The only way you're going to know is if you start to do these post-trade analyses. After each trade, include an analysis to assess the outcome and the process. Actually, I'd say the process more than the outcome. How did you do on each component? We can break it down. We can break it down by setup, trigger, stop, target, time frame, stop adjustment, profit taking, ability to cut loss, ability to let winners run. All of those things we could be looking at independently on every trade, saying, okay, where did I get stuck? For me, there'd be times where all of a sudden I'm like, God, 4 trades in a row, I took profit and it kept going. We got to relax and let it run. Okay. Journaling, maintain a journal to document the context. That's important in the beginning, becomes less important as time goes on, but we want to understand the context of the trade, the decision-making, the emotions we possibly experienced to try to learn as much as possible. We're trying to give ourselves performance evaluation. So we're using the post-trade analysis to evaluate the overall system so that we can see if there are patterns in our behavior and we can adjust the routine to address any recurring issues. And lastly, continuous learning. Remember, post-trade analysis is the only way that we take the experience we got from trading and we turn it into an improved process. In summary, pretty good timing today. I want you to really embrace the concept of routines and habits. Recognize the importance of incorporating them into your daily trading practices. Here's your action step. Commit to establishing and maintaining daily, weekly, monthly routines for more disciplined, effective trading. If you don't have them soon. That's also working on section 5 in your trading plan. Next, structured routine implementation. Routines are worthless, right? My morning exercise and walk the dog and shower and dress well routine isn't worth anything if I keep hitting the snooze button. So we want to understand the practicality of implementing these routines at different intervals. So make sure that you're creating your personalized routines that include pre-market analysis, trade execution, post-trade analysis at every interval. Lastly, active learning and adaptation, Kaizen. We embrace it. The value of continuous learning, adaptation, and improvement in not just trading, but all walks of life. Action step. Make sure your log and journal, they are live together, is current. Make sure that you're reflecting on your trades and just be evaluating your routines to say, are these the best they could be to optimize my performance over time? Bam. Routines. So critically important. Vastly overlooked by traders. So many of the core components of our cement in our foundation, the ingredients of our cement. It's easy to just like, oh, I'm trading, I've got to trade. Oh man, get the right foundation in place, and whatever it is you want to trade, you'll trade better. It's worth it for us to go through and get this foundation in place. Any questions? Doesn't have to be about today. What is a stop limit? What is it used for? So a stop limit is used to try to exit a trade upon it dropping below a certain price. but only if you can get a certain price. And that's where it's a little tricky. So, for example, if I own a stock at $52, I might say, I'm going to put a stop at 50. Now, if I just set a stop, the assumption is it's a stop loss or a stop market, which means that when it crosses 50, it triggers another order, but the order it triggers is market, which is next available price. So if the market's dropping fast, it might hit 50 and trigger me out at 49.50, but I'm getting out, guaranteed to get out, uncertain at what price. That's a stop market, stop loss, or just simply a stop. They're all interchangeable. Stop limit is when it changes the dynamic. It changes what order gets triggered. Still a stop. So it's still the first order, which is the trigger point. It crosses below 50. Bing, the stop is triggered. What gets triggered? A limit order. And remember, a limit order means at or better. So if I have a limit order at 49.75, that means that if it triggers at 50 and it drops to 49.80, it's fine. I'll still get it. But if it gets below, if it triggers and by the time I get out, and you might think, oh, that sounds crazy. I saw some really crazy things happen in the years 2000, 2001, where people with stop limits were left with stocks down 10, 12% in one day thinking they were out, and they didn't because they had the wrong order type. I don't use stop limits. They don't serve a purpose in my trading. They're not going to give you the same protection that a stop loss does, right? When you're getting out because things are going wrong, you're not like, oh, I'm going to quibble over a few pennies. Right? I want out, but only if it's 49.75. What if it's 49 and it's falling like a streamlined anvil? Then I want to get the hell out of Dodge. That's what I want to do. So yeah, eat it and move on. Bob said, very good advice. Got burned a while back with a limit stop. Use market stops now. Where you might use it would be an entry, a buy stop limit, where you say, let's say I put out an alert and you're a stock trader, and I put an alert that says, we like Citigroup if it gets above 55.50 to 55 the day before. Well, I could do a buy stop limit that says, I want in if it gets above 55.50, but not above 56. And what you're able to do is actually create a zone where you're like, you know what, my reward to risk isn't as good. So what that does is if it happened to ever gap, all of a sudden it gapped to 59, and you're like, I want it at 55. If it gaps to 59, that's above 55.50, but we don't want it at that point, right? And so that's the use case that I could see would be that type of a mechanism where you're saying, I want to buy it if it crosses, if the buyers push it enough to cross a certain area, but I don't want to buy it if they've pushed it too far by the time I have a chance to get in. Does that make sense? I hope. Does it make bring some clarity? I hope so. Yep. Awesome. Awesome. Okay. Anything else for the day? This is your chance. This is like the open, the door is open. This is office hours, man. Ask your questions. But what do we have going on tomorrow? Midweek check-in. Yep, market got kicked a little today. It wasn't that bad. We'll talk about what the implications of it are. We'll talk about what we're looking for next. And we will go from there. So I will see everybody tomorrow morning. Ready to make a trade, Leonard said. I hope. So here's the question, right? Is the account set up? Do you know your position size already and your risk levels? Or are you just saying, hey, I'm ready to get trading? Yes, I love it. You're ready to go. Find a bull market, buy a dip. We have a bull market. What's it doing? It's dipping. Let's be ready. Let's be ready. I will see everybody tomorrow morning, 15 minutes before market open, so we can complete our pre-market and opening the market routines together. It'll be amazing. Enjoy the rest of your night. And as always, happy trading.